So how did 4 college students go from being broke to penny stock millionaires in just under 1 month? You're going to want to pay close attention to this presentation, guys. So we are Team 4, and for our project we decided to start a mini mutual fund by investing our own money into penny stocks. After our initial research on the companies that we were interested in, we assigned roles to each member of our team based on our individual strengths. I am Miguel Gomez, an accounting major, and I took the role of the fund manager. So I was ultimately responsible for the final buy and sell decisions that we made. Matt Froberg is a finance major who took the role of our stock analyst. He conducted thorough research about the companies we were interested in and then worked with Preston Goetz, also a finance major, and our investment strategist to really break down that research and present it to us. Our fourth team member was Greg Pistorius, a marketing major who was our operations strategist. Greg also had some input on the investing decisions and was responsible for implementing our communication and collaboration plan through Google Docs. So we didn't actually become millionaires, but we were able to generate a positive return by collectively researching, learning, and investing in penny stocks. Throughout this presentation, we will briefly cover our team contract, teach you a little about mutual funds, describe our research process, and then give you a breakdown of our fund's performance results.
Hey, my name is Greg Pistorius. So in this video, I'm going to be talking about our team contract. Specifically, I'm going to be talking about the steps that we went through to write it, and the different things that we have written in that contract. Coming up with the contract was a different experience than most groups may have had. There wasn't a single evening where we just sat down as a group and decided to write a contract. We had been texting back and forth as a group over a couple of days while we were trying to decide what project we wanted to do. As we began to narrow things down to the specific one that we ended up going with, people's strengths came forward. We started seeing what different people were good at, and we kind of assigned roles based off of that. So our contract had included the things that we talked about in that group discussion. It was really nice, actually, that the whole text conversation that we had, of course, is documented on our phones. So after we had that conversation, I was able to go through and reread everything, and then I ended up summarizing everything into a specific contract that just laid out everything that we had talked about. So I published that on a Google Docs, and everyone went online and they reviewed it and make sure it included the things that we had talked about in the group chat, and then we all agreed to it, and that actually ended up becoming our contract. So it was never actually let's get together as a group and write a contract. It just kind of developed as we were outlining our project. One of the things that we came up with to keep everyone involved, we decided that everyone would contribute $5 initially to the investment pool for our mutual fund. So we thought this would be a great way to keep everyone active and involved, because it puts some of their own personal financial assets at risk. I mean, I know $5 doesn't seem like a lot, but nobody likes to lose money. Plus, through this project, we had the opportunity to actually make money. This was a big encouragement for a lot of us to stay active, to stay involved, and to make sure that we were actually giving our best effort. It's the reward system. The more that we put into it, the more we got out of it. So we thought that was a great way to keep everyone active. What we decided on as a group was to keep everything online. We never wanted to meet. Part of that was because we were all super busy. We all worked, we all had school, obviously, and we didn't have a whole lot of time to meet up as a group. Instead, we decided to keep all of our communications electronic. So we did a lot of texting, and we had the Google Doc. This was actually really nice. It kept a record of everything that anybody ever said. So in the conversation, we got to reread things, reread ideas. In the Google Docs, that's actually really nice because it keeps a record of all the changes that have been made since it was created. So we can see on that document who's been contributing, who said what, how much editing has been done. And it's a record that's on the internet, so we can access it from pretty much anywhere that we have our phones. This to us was the ideal way to set up a mutual fund, because when you think about it, when you invest in a mutual fund, and Matt's going to talk about later what exactly a mutual fund is, but when you invest in one, you don't ever get to sit down with the fund manager or everyone in the fund and talk about what's going on. Instead, all communication is done online. So that's the way we wanted to keep it, to more closely simulate an actual mutual fund. So we divided up the different tasks in the group, and that is written down in the contract who would be doing what, and we encouraged everyone to stay involved by making everyone contribute to the actual fund itself. And this was a great opportunity, I think, to learn how a group functions, learn what motivates people better, and writing it down in a contract definitely helped.
So our project was roughly structured after a mutual fund, which is an investment vehicle where many individual investors pool their money together and entrust it to a money manager who runs a fund and tries to grow the pool of money by means of investing. Mutual funds invest in many different types of securities, including stocks, bonds, equities, and other assets. People who wish to invest money in a mutual fund do so simply by buying shares of the fund, the same way someone might buy shares of Apple, Netflix, McDonald's, etc. And those wishing to invest in a mutual fund will most likely pay a commission fee when they first enter the fund, as well as an annual operating fee, usually between 1 and 3% of however much money the person has currently invested in the fund, as well as a redemption fee when the person wishes to withdraw their money from the fund. Mutual funds are popular because they're open to individual investors, which is quite different from other types of investment funds such as hedge funds, which are comprised mostly of institutional investors simply because the minimum amount of money required to enter the fund is much larger than what's available to most individual investors. Mutual funds appeal to investors who have a substantial amount of money that they don't currently need and would like to invest, but also don't have the time or knowledge to wisely invest it themselves. Instead, they invest their money in a mutual fund that's run by someone who studies markets and companies for a living and knows much better than the individual investors ever could how best to invest their money. One of the difficulties our group faced over the course of the project was how to make buying and selling decisions as a group. When we were deciding which companies to invest in initially, we relied fairly heavily on expert power in the sense that each company had been assigned to a member of our group to research and determine whether or not it would be a good investment. As we went down the list of companies, we largely based our decision of whether or not to buy on the recommendation of the group member who had been assigned that company, because they were, in that case, the expert. That being said, we ultimately made decisions based on the plurality decision scheme, where the option with the most support wins. If there were more members of the group that wanted to buy a stock than there were members that did not, then we bought the stock, and vice versa. Once we had made our initial investments, our job became to monitor them over time and look for other companies that popped up that could potentially be promising. This required keeping a close eye on the companies we were invested in to make sure we knew about any news that came out and could possibly affect the value of the stocks that we held. For example, as soon as the news broke out that one of the companies we were invested in, Antares Pharmaceutical Company, had a lawsuit being filed against it, we came together as a group and decided to sell our shares in anticipation of the stock decreasing in value.
So the research process was probably the most important part of the project and probably the most time consuming as well. Because there's so many moving parts with penny stocks and there's so much to look at, we knew that it was going to be complicated, so we set up some research goals right off the bat. Our goal was to move towards intellective decision making. So even though right off the bat I was tempted to just buy stocks at random, given how complicated the market is, it almost felt like there was no way that you could predict which stocks are going up or down. But after extensive research, we actually were able to narrow down 16 stocks down to 3 stocks. So we each took 4 stocks to research. This required demonstrability in order to make the decisions. That means that problem solvers, group team members, we all needed to have the same information. So we consolidated our research onto a single Google Doc sheet. And you must be willing to listen and communicate. This is another thing that I think my group did really well. Through various mediums, we communicated, and those of us who knew more about penny stocks, that's not me, would pipe up a little bit more often. I did a lot of listening for my part, and we were able to come up with the decision that we have already outlined, the decision process that we already went through. But just to get you an example of the research process in detail, take a look at this video here. So in addition to Celldex Therapeutics, my team also purchased Avio Oncology and Onterris Pharmaceuticals. These are all 3 very similar companies, and they're all involved in drug research. Avio Oncology is more concerned with cancer treatments, and Onterris Pharmaceuticals concerned with self-administrated pens. They've released 4 in the last 5 years that are FDA approved. So a lot of good progress coming from all 3 of these companies. Obviously, we couldn't have foreseen the lawsuit that Onterris got involved in. Oddly enough, the market seems to have responded fine to it. It hasn't been too negative for them. But we did sell our stock as soon as we heard about that. But they all had great third quarter results. They were all cited by expert analysts as essential stocks to have 2017, 2018. And all of the research that I just outlined went very well for these stocks in particular. So the research process really made it so much easier to make this decision. And like I said, it's essential for penny stock investing. Given how volatile these are, things are changing all the time. You really need to stay current, and so that involves keeping your eyes open. And I would certainly, if I end up investing again in the future, like I said, this is going to be something that I take into account to a very large degree.
So as the fund manager, I was responsible for taking the quality research that was conducted by our team and then combining that information with my own knowledge about the market and other factors that affected each company. In doing so, I was able to properly time the purchase and the sales of shares so that we could earn a profit. So let's take a look at this chart on the slide. As you can see, 2 of the 3 companies that we invested in grew in value. Those were CLDX in green and AVEO in blue. The line with the sharp decline at the bottom in yellow was ATRS, and those shares were quickly sold off to minimize our losses. After we sold the ATRS shares, we conducted quick research about where to invest the remaining funds to try and regain some of the money we had lost, and we actually ended up buying more green shares, or the CLDX shares, which actually performed very well. So this next table breaks down each individual stock and each of our transactions. So starting at the top with ATRS, we bought 4 shares at a price of $1.94 for a total of $7.76. After the lawsuit news came out, our investment quickly dropped to $6.56. So that's a decrease of 15.5%, or $1.20. And when you're dealing with penny stocks, a hit like that is massive. As we move down to AVEO, we can see that we first purchased 2 shares, then 1 more when the good earnings news came out about the company. AVEO took a quick dip, so we sold off 1 of the shares just to lock in that profit, then sold the rest of the shares when the price was up. So on this particular stock, we earned a return of 27 cents, or about 3% on our initial investment. Our third stock, CLDX, performed the best. As I previously mentioned, when we sold off the ATRS shares, additional research led us to purchasing more shares of CLDX. So in total, we earned $1.22, or a return of about 16.6% on our initial investment in this stock. So as you already know, we did not earn $1 million return on our small investment. However, our return was positive. When you total our return, we earned about 1.45% in that month. That might not seem like a lot, but if you were to annualize that or convert it into an annual return, it would be roughly a return of 18, almost 19%. And I don't know of anywhere else that you can earn a 19% return on your money. I think most 401ks are returning an average of 10%, and savings accounts are not returning anything. So anyway, just to put these numbers into perspective, our monthly return would have been $14.50 if we invested $1,000 this month. It would have been about $1,450 if we invested $100,000. Like I said, the monthly returns are decent, but when looked at from an annual perspective, our returns are much higher. So on an annual basis, if we invested $1,000, we would have earned roughly $188. And if you have some extra money to play with, $10,000 or $100,000, then the returns are much higher. And lastly, the trading platform that we used was called Robinhood, which is a commission-free trading platform. You can just download it from the App Store. And if you would like a free share of stock, you can use that link at the bottom of the slide. They will give you a free share of stock and you can begin trading. Thank you so much for your attention. We hope you enjoyed our presentation.